Okay, Mark, you are back. So I think we can go ahead and start. Um, Thank you again, everybody, for joining us. Michael, thank you so much for joining us. I really just kind of want to let you start us off. Michael is the CEO and founder of Almanac and was kind enough to join us following the proposal that was posted to governance yesterday and to speak with the DAO members. Michael, if you could just introduce yourself and tell about the proposal, that would be awesome.
Yeah, sure. Awesome. Thank you very much for having us, first of all. As you probably have heard, I'm a huge fan of the protocol. I've been also a DAO member before. Anyways, so my name is Michael. I'm in the space for 5-6 years already. I was always a quantitative analyst. I've been doing tokenomics for many projects before it was even named token economics. And yeah, I've been a DAO member of Bancor for 2 years. I've been working closely on V2 and V3. And yeah, I decided that to quit like a year ago and started Almanac because I saw the need of premium governance partners, partnership requirements from the space. Of course, I was inspired by Gauntlet and Chaos Labs, which are the innovators in the space. And yeah, I managed to gather amazing team around me. There's team of Almanac is a team of 10, I would say, or 11 even already. We have guys from Google, we have guys from EY, from McKinsey, we have guys from DBS Bank of Singapore. So basically, we managed to gather a team of specialists in Almanac that are both blockchain, crypto savvy, and AI savvy. And because of our relation with Bancor prior, I engaged guys. I asked them, guys, we think we can help you. Let us create a proposal and a report, and let's see what DAO has to say about it. And now the proposal is live. I encourage everyone to challenge us. We are here to answer all the questions. The more the better, the harder the better. We hope and we think we covered everything in the report that is quite extensive. However, we are here to improve ourselves as well. So if someone can find something that is questionable, we'll be more than happy to take the feedback.
Thank you so much. And I didn't mention at the beginning of the call, and I apologize to everybody in the audience, but under community, there is a channel. It's live stage calls. So if you do have any questions, you can put your hand up and ask Michael your questions. Mark is up here as well, and Glenn. And if you would prefer to not join us up on the stage, then you are encouraged to please ask your questions in the channel designated for these calls.
So I want to, there was a bit of a discussion in the Bancor protocol chat earlier today with a couple of prominent community members for whom I have enormous respect. And there's a couple of things that they asked about that I kind of want to reiterate here for anyone that wasn't active in that discussion. I kind of want to bring some clarity to this process, and that is that Almanac is acting here as an entirely independent third party. They had the good manners, I would say, to contact me and say that they had this idea to approach the BancorDAO with their product, and that they were sort of looking to make a name for themselves in DeFi as being a preeminent protocol optimizer, competitive to Gauntlet and Chaos Labs, as Michael mentioned. But they're not. They are not part of the development. They're not a contractor to the Bancor Foundation. They're actually not in any way affiliated with Bancor Protocol, other than for Michael's previous history, having previously contracted and worked on the protocol with us. But it is an entirely separate thing. And so this is not this isn't an initiative of Bancor. This isn't this isn't something that is being generated from within. This is something that is being generated from without. All right. This is this is basically someone entering the DAO, having some familiarity with the process, and asking to engage with the rest of you, right? This is something that this is a process that I'm not really a part of, or anyone else that is currently contracted by the Bancor Foundation, other than to say that we have had several calls, mostly so that we can sort of criticize the Almanac's approach, so that we can answer questions. We've also shared the Bancor simulator with them as like a research tool, which is completely open source. And so really, I see this as a the first sort of bona fide decentralization attempt of a third party to assist the BancorDAO with their fee management and liquidity management responsibilities. So this isn't something that's being pushed. This is literally up to all of you to decide whether or not this is something that's valuable. What I will say, and what I said in the protocol channel, is that the business model of Almanac is to receive remuneration directly from DAOs and projects that they collaborate with. And because we haven't yet set up the Guernsey Trust for the Bancor DAO to finance its own initiatives, we have, I think, preemptively organized a contract just to cover the running costs of the simulation. So, the Almanac currently isn't being remunerated at all by the Bancor Foundation. The foundation has just agreed to cover the costs of the computation, which I think is about $5,000 a month. And this is contingent on the Bancor DAO continuing to want this, right? So this is basically just trying to be as supportive as we possibly can. It's not more complicated than that. So I think I just wanted to get that out of the way, because it's obviously something that is of critical importance, and Almanac's whole mission statement is one of transparency and upfrontness, and so there's no reason to withhold any of this information. But yeah, I just wanted to address those points. But yeah, other than that, I also wanted to ask Michael directly if he would mind telling us a little bit about the history of Almanac, because you started out on the Terra blockchain, right?
Yes, that's correct. So adding to what you just said, I would like to highlight that yes, it's kind of probation period. We want to gain your trust, guys. So yeah, we are not making money, and once we have proof that we are useful for you, then we're gonna negotiate directly with DAO and ask DAO how much they think our work is worth, and if they want to collaborate further with us. Yeah. So up to DAO. Of course, we're gonna provide you with relevant reports on our performance, and hopefully on the performance of the protocol as well. And when it comes to the history of DAO, of Almanac, our history is quite bumpy, because we started to build on Terra, and we have built for Mars protocol, which used to be money market on Terra. We have built same what Gantet has built for Aave, or what Chaos Labs has built for Maker, which is risk parameters optimization and capital efficiency optimizations. Simply, we've been recommending what should be the loan to value of the assets on Aave-like protocols, bonus liquidation threshold, and how should the lending curve or borrowing curve look like in the assets to maintain the highest revenue for the protocols. We've been about to deploy it, and the Terra has crashed. So yeah, it was quite a bumpy road. And that was the time when we started to look for a pivot. I remember I had really good memories from working with Bancor, and we asked guys if maybe this is something that they would be interested in. I remember I was very vocal about the need of such a product when I've been working with Mark on V3. And I think that was also one of the benefits that I brought to the table, that I knew the product very well. Therefore, the communication was flawless. And in a few months, we've been able to get a consensus with the support of guys with the simulation part. What should be built and how it should be built. And now here we are. We managed to deliver robust simulation and the environment around it and the infrastructure, which I'm not sure if I should touch it right now, but maybe if someone is more interested in how it works and why it's superior technology, I'm more than happy to extend it. What do you think, Mark?
Yeah. So as the as I've tried to indicate on some of these simulator calls, that the simulation that we've built, it's a general research tool. I think that a lot of people have had the wrong idea. I think simulation, just the word, it inspires all of these thoughts of sort of futuristic, like the deep thinking machine from Hitchhiker's Guide to the Galaxy, where you can just ask it, what is the answer to life, the universe, and everything, and it will sort of ponder it for a little bit and then deliver you an answer. In reality, simulation is a very specific sort of data science skill, and it's very I mean skill in the with capital letters and underscored. If you feed it junk data, it will generate junk results. And even if you feed it good data, if you don't have someone that's very clever who's able to interpret the results that a simulator generates, then it's very difficult to transform that into action. And Mike and I, we are working constantly in the background on having sort of an agent-based simulation, something that drags blockchain data and tries to run these optimizations, and it's something that we're committed to. But the reality is, right, Michael's team is much larger, and they have a singular focus on doing this. Whereas Mike and I and Nick and Barak, we have other things that need attention. Things like running the research for future products and everything else, and making sure that the project continues to advance. And so to have this opportunity where someone is stepping in and using a resource that we've already built specifically for this purpose, and then having a dedicated research team that is exclusively using that resource to build an optimizer, rather than using it for research and product development purposes as we are also using it for, then I would say that it's it's a profoundly different type of situation.
Yeah, very well said. What I would like to add, maybe I can describe like what are the main differences of what we are bringing to the table when it comes to the simulator. We took inspiration from what we got from Bancor. So how Almanac works, Almanac takes data from blockchain. Those are live data. Those data are being taken every day. Based on those data, we train our agent. What's the agent? Agent are you guys, are users of Bancor, are arbitragers, are traders, are LPs, whatever. And based on those historical behaviors of those agents, we train them, and we train them also every day. Those agents are being taken into our simulation environment, and with the simulation are being broadcasted on the environment, which is blockchain itself. So the simulation itself is 1/4 of what we are actually utilizing, because they also have the data pipeline, you have the environment, and you have agents itself. Yeah. And this is one of the toughest part to define the agents accordingly, so they behave as an actual agents. The environment is also quite tough to define, because you need to create a custom Ethereum virtual machine. And the data pipeline is also a challenge. Like, actually, everything is challenging, but data pipeline is also challenging because you want to, the simulation to run, efficiently, you need to pull the data every day, which is not that easy as it sounds. Yeah. So these components we bring to the table, and of course the simulation itself, like Mark said, is like a calculator. And you need to know how to use it. So we are also like using the simulation in a way that produces relevant data, in form of the charts we've presented in the report. Yeah. We want those data to be reported to Bancor as fast as possible. Of course, it's not going to be like the charts. It's going to be something way more robust and readable. And yeah, and basically that's how it works, in long story short.
Thank you so much for that. Mark, I know that you had mentioned, you and Mike and Nick, and you're going to, you have your focus on something other than the actual simulations at the moment. And a question came in: how will Almanac's tooling work with Bancor Simulator that has been recently provided to the Bancor DAO to help increase visibility and discussion?
Right. Yeah. And so I think this speaks to really the motivation behind making that simulator in the first place and open sourcing it, is that it is a community tool. One of the things that can be done, in my opinion, to someone who is interested in auditing, for example, some of the stuff that Almanac has produced, or verifying the claims of success. What the simulator allows you to do is to actually go back and say, hey, okay, they said that this particular fee increase or this change in liquidity or whatever had this result, and therefore we think that this was positive. If you want to be critical of a claim like that, then you can just boot up the simulator and say, well, let's verify that, right? Let's take those inputs and run a situation and confirm the results of this third party. That's really the in a way it's the truest the truest value proposition behind having that simulator be available, is that you no longer have to take people at their word. You can run your own settings and confirm for yourself whether or not claims to efficiency or to productivity overall are actually valid. And so, yeah, I'd say that it plugs in perfectly well. In a sense, what in the best case scenario, what you want is a DAO membership that is flush with people that are familiar with the simulator and running their own scenarios and making their own observations and suggestions. And I know that that's not practical, at least right now, but we've started to, we've at least started to make some headway in introducing people to the use of the simulator and that kind of thing. And so, best case scenario, one day, community members are themselves providing their own reports, using the outputs of the simulator and including that in their proposals. And so for Almanac to step in, I think, is just kind of a natural consequence of having these kinds of products available. Every time something like this happens, of course, there's going to be a business opportunity there, and that's going to be annexed by enterprising third parties. And I think that that's what's happened here. But I don't, when I was reading over some of the messages today, it seemed to me that people thought it was kind of counter to, or it was in competition with, the simulator itself. But it's not, right? These are, these two things can both be present, and the service that Almanac has provided is in some ways not entirely predicated on, but at least supported by the fact that people can use the simulator to to perform this work on their own. So there may be one day where many years from now, where we have hundreds of very skilled programmers and risk analysts and stuff inside the Bancor DAO that are performing these actions out of their own volition. But I still think there will always be a place for expert services such as Almanac, such as Gauntlet, such as Chaos Labs, and many others. I consider this to be an emerging industry, And just as there are expert consulting services in the regular financial world, it's just totally not surprising to see to see new companies get founded and started up to bring that kind of utility to blockchain protocols. But yeah, the simulator that we've built, in many ways, in my opinion, is still at the heart of it. Michael said that he's using it, and that means anyone can. So yeah, they're complementary, and it provides a common ground, I think, for users of the protocol, DAO members who are wanting to confirm for themselves what Almanac is suggesting, but also for Almanac to to present stuff in a way that is amenable to simulation, which is very much in in standing with their their transparency and auditability ethos. So yeah, they're not in conflict with each other. In many ways, they're complementary, I think, is the best way I can express it.
Great. Thank you so much. It makes so much sense. Michael, I don't know if you want to add anything to that. Otherwise, I have a couple more questions I can move on to.
I think Mark summed it up really well. We can move
Perfect.
forward.
Agreed. Okay. So where is or will be the gas usage and cost be tracked for the daily active management? Now, I know you had mentioned that it might not be daily. I think in the proposal it says daily.
Yeah.
Maybe we can clarify on what
I
you
can
actually
clarify it
mean by
here. So basically, the simulation is going to be run whenever, either every 3 days or a week, or whenever there is a need. By a need, I mean if there is a significant market event. And the same with the recommendations. Recommendations are going to be provided based on we are going to produce a set of the recommendations. There's going to be matrix with like, if this happened, then do this. We are going to provide those recommendations also every day, or if some event happens. But if there's no event, let's say the volatility is flat and the market is not moving much, the updates are not going to be relevant. Yeah? So there's no need to update them. So the gas cost is going to vary based on the amount of updates. We don't feel like we're gonna need updates more often than weekly. Sorry, than daily. However, we will see. When it comes to the computation of the transaction, this is question to the development team of Bancor. I'm not sure how much the contract upgrade is going to be, but I believe it shouldn't be much expensive. The changing fees and trading liquidity is like adding liquidity. It shouldn't be expensive.
It's not expensive, and these transactions all appear on chain. People, we can happily append the transaction hash to each report to verify that the settings were updated according to Almanac's recommendations, if that's what if this is what the DAO decides that they want to do. But V3 was designed so that the gas expense of changing things like liquidity and the swap fee is relatively benign. It's not a blocker at all.
Yeah, we will create a bot that probably can be transparent and will pop up the recommendation. Yeah.
Perfect. Silent, thanks for your questions. Shane asks, Michael, as an outside entity, in your opinion, what was the biggest issue that led to the deficit in V3? I don't know if you...
I'm not...
might be slightly putting you on the spot there.
Yeah, I'm not an outside entity because I've been participating in the development of Bancor V3, so I understand the product very well. In my opinion, which is a little bit of selling our services, is the lack of trading liquidity management. Because when the asset has been transferred to V3, such as Ethereum pool, Link pool, Wrapped BTC, all the pools from V2, they've been transferred with all the trading liquidity. And if, for example, Almanac has been onboarded at the time when the prices started to crash, we likely would recommend to decrease this trading liquidity to the lower level. Therefore, the deficit would be significantly smaller.
Perfect. Thank you. Second question from Shane is, should the DAO approve the proposal? What do you consider quote unquote success to look like for this partnership or collaboration or however you'd like to word that?
So we would, so yeah, what we aim for, we want to increase first of all, we are aiming to decrease the deficit. And how to aim towards decreasing the deficit? So we have two parameters we are measuring. One is the protocol revenue, and second is the protocol impermanent loss. So we want to increase the protocol profits, which is revenue over impermanent loss, by at least 10%. If we feel like it's 10%, we're gonna be super happy with this results. We hope it's gonna be higher. We don't want to 10 is like we feel relatively comfortable with saying that. You also have to be aware that it's at the beginning it can be lower. The protocol is going to learn. So after 3 months, we hope we're gonna reach 10%. Yeah, but it can also be at the beginning 5 and 2 because it's machine learning. Yeah, so the more data we digest, the better we're gonna perform. Does it answering your question, Shane, or maybe I should decompose it more?
I want to I want to opine on this. So first of all, when Michael says that the revenue, which the protocol profits, which is revenue over IL, is increased by 10%. That doesn't mean an increase, an improvement in the deficit by 10%. Potentially, it can actually represent a much greater number than that. So I just wanted to just say that these are independent variables. They're not the same thing.
Yes.
The other thing I want to say is that this is one of the aspects that we really grilled Almanac on when we met with them. Was to come up with some sort of performance metric, right? Some way that we can actually verify or validate or estimate what the impact of a particular recommendation was, or a collection of recommendations over time. And Michael, maybe you can speak to that, because I think that and you feel free to be technical if you want to be, and we can do our best to try and communicate it or paraphrase it at the end.
Yeah, so we are still working on a tool to show how our performance is going to look like. The easiest is basically to see or to try to notice if there is a significant increase in the revenue or significant decrease in the protocol deficit. This is the easiest one. Yeah, but it's hard to measure how much of the input is by us. It will be visible that you will see the increase in revenues, you will see the decrease in deficit, but we are still trying to measure the impact of our recommendations, and there are a few ways to do it. One of the way is basically simultaneously to our simulation run another simulation with the same agent and same market behaviors where the recommendations wouldn't happen. And then we can see what's the difference between the performance. Another way to do it, which we don't think is the best, is to simply see how the market would behave without changing anything. But then the volume likely going to be different, the revenue is going to be different. So yeah, we are still in the discovery process. We are sure about the first, what I told you guys, that it should be beneficial. We are still thinking about the second thing. There is some space for feedback. Maybe someone is familiar with the topic. We are collaborating with Stefan from Bancor, who's a ex McKinsey risk and trading specialist as well. But yeah, there definitely will be some performance reviews at the end of every month, maybe every quarter. We also haven't specified it yet.
Michael, I have a quick question of my own. So speaking to the reports possibly every month, when I look at your proposal on our forum, it shows daily revenue and there's a chart there. And it looks like it's a 25-day chart, 30-day chart. You've got your numbers and you're comparing, right? The daily revenue optimized and non-optimized. So this is coming from reports that you had previously done and simulations that you had previously run, right? Okay. So it looks like, and maybe I'm mistaken, but if I do this math, am I right in thinking that for that particular one, it was like 18% more?
Yes, that was 18%. I wanted
Something
to be
around
more,
that, right?
Yes, I wanted to be more conservative and I said 10. But if
Right.
you already brought that up, yes, we had this result.
Okay, so I'm just kind of looking at what you have in your proposal as you're kind of speaking to these different things a little bit. And then then the other one was the VBNT versus BNT burn that you're showing.
Yes, we are also we recognized that Bancor has changed fees to burn 95% of VBNT. We included the formula of the VBNT. We also simulated Vortex. Vortex has also different trading rates changing over time. And yeah, we included how much of VBNT is likely to be burned more as well.
Okay, then I have one more question of my own, and this is just because I'm so unfamiliar with this. And while I have you here, and if anybody else has any other questions, please submit those. But I'm looking at the protocol profit charts, and it's almost like this color. It's like this beautiful, colorful chart, right? You might not have it pulled up there, but maybe you can kind of just, in simple terms, explain what that actually is for. Okay, thank you.
So this particular chart I'm looking at, which is chart 2. Yes, this is chart 2. Shows where the profit, in what type of setups the profit was the highest over 10,000 of simulations. Yeah. So the chart was produced in order to spot the trend and if our simulation is actually behaving in a way that is logical. Yeah. If we run 10,000 simulations, you can see that the lower the trading liquidity, and when the volume is low, the higher the trading liquidity and the lower the fees, the more money you are making and the less you are losing. And in opposite, if the volume is high, the higher the fees and the lower the trading liquidity, which means you are also making more money and losing more money. Protocol profit is revenue from trading liquidities and costs of the protocol maintenance from impermanent loss. Yeah. And as you can see on this chart, you have like two trends coming. However, like I said, there are 10,000 simulations and they're like highly subjective. So this is just the trend we have seen over different volatilities.
Okay. Okay. Right. So when I first started learning about simulations, I was even asking Mark and Mike after the first call. I was like, I don't understand. You ran a simulation. What's the conclusion? I didn't realize at the time that it was like thousands, 10,000s of simulations
10,000.
That need to be run. Yeah. Right? 10,000 that need to be run in order to get this sort of actual, like, reliable data that you actually feel confident in.
Yeah. So we are running.
And I think
Kubernetes.
that's.
Yeah. Sorry.
No. Please continue.
Yeah, so this is also like what we can be proud of, that our amazing team from they used to work in a bank. They were building infrastructures like that. We managed to build infrastructure that's able to run those 10,000 simulations in 2 days, which is very impressive because the simulation is quite heavy. And we run on Kubernetes, which is a framework when you can scale horizontally. So we have like a few virtual machines that are running those simulations and optimizing. And what's the best, those simulations, while being run, they communicate with each other. So they just react to each other's behaviors. This is slightly technical, but it's also very cool. If someone is into stuff like that, probably appreciates that.
Yeah, and you had mentioned the ETH link WBTC and DAI pool in the proposal. So this is
That's
strictly for these 4 pools
That's
that
correct.
you would be making these recommendations.
That's correct. We are more than happy to
And
engage with more pools. Yeah, sorry.
No. Go ahead.
We are more than happy to engage with more pools. However, we wanted to, like, onboard these pools first. It's time consuming to create those data pipelines, especially for such a big asset as Ethereum or BTC, because you have so many different data sources. And also, we are more than happy to start talking with some small projects that maybe not small, but new projects that want to be onboarded on Bancor. And we think we have a solution to bring those projects back with impermanent loss protection. So yeah, if someone is interested, please engage us. Basically, we are able to recommend those projects how much trading liquidity and they should have in order to mitigate their impermanent loss. And we can recommend also the external impermanent loss protection that would consist with their own tokens to be sufficient enough to cover those potential losses. So basically, we would be able to promise again what Bancor was made for, which is no impermanent loss for those projects.
I just want to follow up on that comment. One of the design features behind Bancor 3, as I think a lot of people have become aware of only recently, which is a shame, is the ability for external projects to provide their own impermanent loss protection mechanism. And this one has already been used by Acre and Crown Capital. And so what Michael is talking about there is essentially how to get how to optimize pools for those projects such that their own impermanent loss protection budget can effectively be managed. I don't, I can't put words in Michael's mouth, but I don't think that he's necessarily saying that we should turn the BNT protection mechanism back on and more lean into these other advanced features that B3 had.
Yes, exactly. To be clear, no BNT being minted again, only external impermanent loss protection. But Bancor would be able to offer it to some projects again. That's what I meant. Bancor as a platform.
Understood.
Cool. Thanks for clarifying. If I could backtrack just a minute, we were talking about the chart, Michael, and a question came in that I didn't see until just now, so I apologize. What are the values of relative average size of TL? Is that a percentage of total TVL supplied by LPs?
Not by LPs. So, correct, yes and no. Let's say you have, I'm not sure how familiar you guys are with Bancor V3 platform. They have trading liquidity and non-trading liquidity. Let's say trading liquidity currently is 100 ETH. And relative to this 100 ETH, we are decreasing it by 20% or something like that, yeah? So you have 80 now. Increase it by something. This particular chart is showing actually decrease, yeah, by 87 to It was the most common.
This is the on. This is like the on curve off curve ratio.
Exactly. Yeah.
Okay. Perfect. Now, a question that I had seen kind of going around, somebody had asked it yesterday in one of the channels, and I told them that I would ask on their behalf if they weren't on the call, and I don't see them. Can you explain the purpose of asking the DAO to approve a sort of blanket approval for these recommendations to be implemented without going through the DAO procedure as we see it currently?
Yes, with pleasure. So when it comes to granted recommendations for Aave, those recommendations doesn't have to be super dynamic. However, when hello, can you hear me?
Yeah, you were cutting out there for a minute, but we can hear you again.
Yeah, sorry about that. Yeah. So, however, when
That's okay.
When Bancor was working with Balancer, what they did they engage with Genosis.
That's when Gauntlet was working with Balancer, by the way, not Bancor.
So I was going to ask that. Okay, so Gauntlet and Balancer. Okay.
Sorry about that. Gauntlet was working with Balancer. They engaged. They have created a special smart contract using Genosis. Genosis is a DAO tool that allows you to manage things with multisigs that would allow them to directly change trading fees in Balancer pools. Yeah. So why they did that? Because if you do risk management or on Aave, you are just setting up loan to values, liquidation bonuses, and liquidation thresholds, and they can be changed like, I don't know, weekly, monthly, sometimes they can stay flat. When it comes to trading or trading liquidity or swapping fees, you need to be way more reactive. Let's say an hour ago there's a market crash. Yeah, or market is crashing. We monitor volatility every half an hour or every 15 minutes, and we can react fast. And the faster we react, the more losses we can recover and the more money we can make for Bancor. Therefore, that's the reason we want you to vote once that yes, we are okay with that. Of course, we're gonna put some maybe boundaries that we cannot change the pool more than X, or we cannot increase the swapping fees more than X. This is to be discussed. This is actually great that we figure it out right now. Therefore, it's going to be sent straight to Bancor, and Bancor team is going to be also the filter that is going to filter out if our recommendations make sense. I hope with time we will be able to make it even more smoother and maybe create also smart contract like that. However, I understand that we need to do baby steps and see how it's going to work.
I think with regards to that process, it's not too dissimilar from some of the fee structures that the DAO has voted on previously, where we were trying to gather gather results regarding how swap volume, for example, is dependent on the swap fee and other things. Where the DAO voted once for the fee to be changed up and down via a certain range over a certain period of time. So this is, in my opinion, at least a little bit similar to that. I want to clarify something that Michael said, which is that the Bancor DAO MSIG, they're actually not going to be able to necessarily filter something out. I think that if the DAO goes ahead with this, it would be effectively binding that in that proposal, unless there's very specific wording there. But I think that if it's the DAO's will to accept the Almanac recommendations over a certain period of time, the DAO MSIG is not going to be able to exercise any what's the word I'm looking for? Diligence.
They won't override that.
Yeah, exactly. It will not be overridable. It will be taken. It'll be. Yeah, I just mean that obviously if there's something ridiculous, like if if there's something ridiculous, then it's possible that we can bring this to the DAO's attention or something like that. But otherwise, there's absolutely no ability to act as a critical entity in that. If the DAO says over this period of time, please accept the recommendations by Almanac, then that is what will happen. And I think that that's an important point to make. And I think that with that in mind, it's really important that the proposal by Almanac be very carefully read by people that are voting on it, and making sure that the parameters that they're allowed to suggest are within the comfort levels of the Bancor DAO. I think what Michael suggested there about no change being greater than some proportion of the available liquidity, or by some proportion of the current trading fee or something like that, setting thresholds, super important. And it's also super important that is written in the proposal that ends up on Snapshot and voted on and voted on by the DAO, because it becomes law, and I mean that in the absolute truest sense. Where once it's passed, this will be treated as the will of the DAO, and it has to be executed to the letter. And so something to keep in mind when you're reading over this this proposal. And I do encourage DAO members to comment on it, right? If you're uncomfortable with the scale or scope or with the precise language, please modify it. Almanac is just a DAO participant at this stage, and it's their responsibility, as with anyone else who is proposing things, to respond to propose changes and incorporate them where necessary before it ends up in Snapshot. And so this is something that I really don't want to rush. I think that it's kind of a first for the project, for both for both Bancor and for Almanac, and to make sure that this is done with care and under the with full understanding and with a fine comb. This isn't something that you want to rush into.
I couldn't
I have
agree
a question.
More. I couldn't agree. Let me.
Sorry, Michael. Go ahead.
Yeah, add something. I couldn't agree more with Mark. Please challenge us. We want, first of all, you feel comfortable with everything. We already have a great feedback to set up ranges, and maybe another thing is gonna appear. For clarifying, yes, I meant what Mark said. I meant if something ridiculous being reported. Let's say if our bot go crazy and report to, I don't know, withdraw everything. I hope Mark gonna send us a question if this is okay. But yeah, only ridiculous things. That's what I meant.
Great. Thanks for clarifying. And I didn't mean to work my way in there, but I wanted to touch on something that Mark had said. Mark, you said that once, the DAO votes on this, say they vote for, right? And it's law. And I respect that as a DAO member. I respect that once it's voted in favor of, or if it's voted in favor of, that's it, it's law. But I want to ask, there is a way, just as with any other proposal or any other vote that goes to the DAO, there can be in time, some sort of an addendum or some sort of change made. Say the parameters are voted in favor, or whatever it happens to be. If we decide, the DAO, that we aren't content with this and we want to start working something different, this is a possibility.
Of course.
Correct? I mean, this isn't
absolutely
necessarily that set and done for the next 3 months.
You can always fire us, guys.
Yeah. Okay. In general, the way that that there's a whole emerging legal framework around DAOs and blockchains and things. But yeah, in general, new proposals that are voted on always supersede the prior ones, right? And in terms of the DAO expressing itself, if it votes for this to run for however long, I think 3 months is what's in the proposal. If after the first day they change their mind and propose to end it, then that becomes the new precedent. And that's true essentially across all DAO infrastructure. This is how it's being handled both in Switzerland, where Bancor is registered, but also in the United States. And yeah, so just know that this is a jurisdictional thing, but in general, that is the way it's handled by by everyone. It's if you want to exit, the DAO can exit from anything. It can change its mind on anything. It can do almost anything that it wants, as long as it's not breaking any known laws. And so, breaking a contract with a third party is something it's absolutely entitled to do.
That's correct.
Okay, great. And then, Michael, another question for you. How involved will the DAO be? I mean, these recommendations that you'll be making, are you putting them up on governance? What is this actual process going to look like if this were voted to be passed? So
we have created a bot that is going to report it. We still haven't discussed with Bancor multi-sig owners what would be the most efficient way to send it over. But I believe maybe a Telegram bot chat which would report the updates and report them to the guys. And it can be publicly visible for everyone. Something like a liquidity bot that has been created for Bancor, or like Bancor Vortex bot that shows how much of the Bancor has been burned, something along these lines. It hasn't been discussed yet, but I believe that would work very well.
That actually sounds pretty cool,
Yeah.
though. You're talking about like an actual Telegram chat, like we can join this chat. It wouldn't be something for us to post on. It would just be posts with recommendations that your bot is making the actions.
That's correct. And let's say
Is that what you're saying?
recommendation and another recommendation when it was actually changed. Yeah. So we see when.
Okay, so when that action. Go ahead, Mark. Michael, sorry. Either one of you.
I was just going to say, from an implementation perspective, whenever those recommendations come in, it would be treated exactly the same as if the DAO put up a proposal and voted to change the fee on Snapshot, and then that vote ended. Right. In terms of process, it's exactly the same. We would just treat whatever that recommendation is as, substituting for the end of a Snapshot vote on precisely that recommendation.
That's correct. Yeah.
Okay, somebody's asking for clarification in the chat. All the recommendations would need to be manually implemented by the MSIG then?
Yeah, correct.
Correct.
So the Gnosis contracts that Almanac that Michael was talking about just previously, that was being used by Gauntlet for the balancer pools, we haven't set up something like that, and it's my personal preference that we don't set up something like that, at least for now. That infrastructure is still, potentially problematic in my view. But if the DAO wants something like that, if this is an ongoing relationship, or if the DAO wants to engage in other optimizers, right? It doesn't have to be Almanac. It can be, if Gauntlet approaches the DAO with a proposal, or if Chaos Labs approaches the DAO with a proposal and they would prefer using something like a Gnosis contract, and they pay the gas fee to execute these changes, then that's obviously something that, if the DAO wants to demand it, all they have to do is write a proposal, and it will be made. But for now, I think this is the most frictionless and the easiest implementation path. But if the DAO wants to do it another way, we can do it another way.
What is very essential here is the time of execution. If we are able to execute fast enough to grasp the opportunity, and it shouldn't be an issue. We will see.
Great. Thanks so much. Glenn, are you there with us still? I don't know if Glenn is up here.
I'm here. Sorry, I had myself muted.
That's okay. I know that you were kind of looking at the channels and things as well. I don't have any other questions for Michael and Mark, and I want to give them the opportunity to speak on anything else if they'd like to, or again, invite anybody in the audience to join us up on the stage or to add additional questions into the chat. But in the meantime, I just wanted to ask you if there are any other points that you would like for them to touch on, or questions that you've gathered from the community.
Yeah, I mean, I guess from my end, maybe I do know, I already sort of know this, but Michael, maybe you can speak to maybe as to why these like pools were chosen, right? There's 4 pools that are sort of being recommended on. One of those is the DAI pool, but we also have like 2 other stablecoin pools, right? We have a USDC and USDT pool. So maybe you can speak to like why these pools specifically.
Yes. So when it comes to Wrapped BTC, Ethereum, and Link, they were simply the biggest pools. Therefore, the opportunity for us to engage with them is the biggest. Basically, we can bring the highest revenue, dollar value-wise, for the protocol. When it comes to DAI, when we started to work with you guys, DAI was the only pool available at V2 at the time, and we wanted to have just one stable pool at the beginning. It's not super hard to add other stable pools, and also we are fans of decentralization. Therefore, we've been sure that DAI is gonna stay around when USDC and USDT, who knows? It was the time when SEC was taking a look on centralized stablecoins, and we simply took DAI as the safest bet to work with.
No, that's good. So I think you had mentioned that it's easy to like onboard other pools, right? So What does that process look like from your end? Let's say maybe the community decides that this is going well. They want to sort of like do this for maybe like, I don't know, Engine or some other token that's listed on Bancor.
So there are two ways to do it. First way, the project itself engages with us, and then we are discussing with projects what's the best way of collaboration. We really want to collaborate on a performance basis. This is our ethos. We are optimizers. We make money. If we make money for you, just give us a chunk of the money. Yeah. So this is how we would engage with the project. If the project is not willing to engage, then ideally we are engaging with DAO that suggests that, and we are making the deal with DAO, like how much of the profit we can get from it. Yeah. But when it comes to the cost of the onboardings, we would rather wait for DAO to be sure to collaborate further with us and focus on the current pools to work smoothly, and engage with the DAO suggested projects later on. We just want to focus on those 5 pools over the next 3 months, and later we can onboard more depending on how DAO is happy with us. Yeah.
I see. And like, I guess tracking progress, right? What is that going to look like from your end, right? Is that going to be something that you guys, or Almanac in this case, is going to be sort of delivering a report? Like, what timelines do you see for that happening? Is it going to be like a monthly report, weekly? Like, how often do you see that report occurring?
Ganted is doing it quarterly, which we think makes the most sense. Monthly reporting is just simply a huge headache, and also the more data you have, the easier it is to show something. And by easier, I don't mean like easier for us, but easier to everyone to understand, because you have like bigger spectrum. I think we would suggest quarterly, but if someone if DAO would be very willing to get it monthly, we can also do monthly, of course.
I see. Okay. No, that sounds great from my end. I think these are some of like the initial questions that I had. I'll have some more thoughts. I'll put them in governance. I shared the link with everyone in the live stage calls. If you guys have any questions as well, feel free to append there. And then like, obviously we can answer them through the governance, discourse, or, another call in the future. I think Caesar might have some questions here. Caesar, do you want to come on stage, or I guess I can just take them from your chat here, but feel free to raise your hand. I guess one of his questions, he said he wants to come on stage. Let me bring him up. Invite speak. All right, you should be able to come on stage, Caesar.
Hi, guys.
Hello.
Can you hear me?
Yes, we
Yeah,
do.
you're good.
Yeah, sorry, I hopped in a little bit late. I was on another call. I kind of skimmed the proposal. I haven't read it, so if their answers are in there, you can just say, "Hey, go read that," and I'll read it more carefully. But my understanding here is that you've created bots that monitor the situation of the volatility of the LPs or the tokens within them, and then you provide recommendations. And so my understanding is that you would suggest that we pull some liquidity out of those LP positions in order to make them more efficient, right? So kind of like concentrated liquidity, but it's still the full range, but the depth, impact of the price of the arbitrages and of people trading will have a better impact, or a more beneficial impact on us based on your recommendations. So if you're pulling liquidity out, where does that liquidity go? And then when you're putting it back in, then where would it be coming from, basically? Where is the buffer, the place where it's sitting? Am I completely off on this, or am I?
I will clarify whatever you asked. So first of all, thank you for reading the proposal. Also, there's a report which is way more extended. It's 38 pages, which explains everything. We are first clarification. We run agents, which is a slightly different. Agents are are defined in the industry, and those agents behave in a way. And Bancor V3 has a designed mechanism that allows you to pull the liquidity out and put the liquidity back onto the trading curve. So answering your questions, if we are withdrawing liquidity from Bancor, it stays off the curve, which means non-trading liquidity, and it simply stays idle. However, the liquidity still participates in and trading rewards, trading fees. Yeah. And if we put it back, we simply just deploy it back. And analogy to Uniswap V3 concentrated liquidity is correct here, I would say. It's somehow correct. However, we don't amplify it, we just have it. Or not. Yeah. And simply the smaller the liquidity, the lower the impermanent loss exposure. But the worse the price, the bigger the liquidity, the better the price, trading price, but the bigger the exposure to impermanent loss.
Okay, I think I understand. So yeah, it's like I said, like you're based on volatility, you might suggest to add liquidity or pull liquidity in order to just the price impact. Basically, you're playing with the ability of price impact to come in, right? Like
that's correct.
If you pull out liquidity, then the price impact will be greater and so forth, and then less likely that people will trade that pool at that time. So
no. That's actually not. People will less likely trade on the pool, but we are maximizing towards revenues. So, for example, we can decrease the fees simultaneously with decreasing the trading liquidity, and people would trade there. We want people to trade. People eventually will trade. Yeah, if we just withdraw money from the pool totally to not have impermanent loss, that might happen, but I doubt. But we haven't seen it in our simulation. The price impact is the movement of the prices, the divergence, and it will happen, but it's linear. Yeah, the bigger the pool, the bigger dollar loss if the prices are diverging. Yeah, so we are just making this dollar value smaller if the prices are moving towards a direction somewhere. And we knew that if we have kept the same amount of money, the protocol would have the same revenue. Yeah. So basically, we are decreasing this trading liquidity to have the same revenue, but smaller impermanent loss. Does it make sense?
Yes, it does. Yeah, I understand. Thanks a lot. I get it.
What is worth to mention, we are monitoring not only volatility, we're also monitoring the share of the arbitrages within the pools. So we can adapt based on how many arbitrage trades are being executed on Bancor, basically to take some money from the arbitragers and leave them back to the pools. So basically, if there's like high volatility and arbitragers are being like crazy on the pools, we evaluate how much fees we can apply to them to still keep them profitable, so keep the same volume, but leaving way fees behind.
I see what you're saying. So like you guys will monitor it, and if you see that there's a lot of arbitrage bots running, they run just based on is it profitable or is it not, right? So
that's correct.
Then you can just make sure that it's still profitable, so they still arbit.
Yes.
But less profitable, and most of that, and the profits will stay within the pool or within Bancor itself.
Exactly.
Caesar, thanks so much for coming up and asking your questions. You can stay up on stage if you just want to mute yourself. If you have any other questions, like please do.
Okay, sure, no problem. I'll mute myself.
Well, unless you have other questions currently. Like, do you have any more questions right now?
No, I don't actually. I just wanted to understand what they're proposing here.
Yeah, no, we appreciate you jumping up here. And like I said, if you want to stay up on the stage and you have any other additional questions, like please go for it. Michael, in the meantime, I've got somebody in the chat that is talking about incentives, and we don't speak too much to the foundation. Mark, I don't know if you want to speak to it, but I kind of want to reword it a little bit. You had mentioned that the what you're receiving in, funding is basically just enough to run the simulations, right? So what is your incentive then? If this isn't going to ultimately be like super profitable for you, what is your incentive for like working with Bancor and the Bancor DAO?
Yes, so we hope that over those 3 months, we will build enough trust and we will increase the revenue enough that DAO would pay us for that, simply. Let's say if we are able to increase the performance by 10%, maybe we can get 1% of it. And that would be, or maybe 2. We don't know. We will discuss with DAO later. But simply we want to become the DAO members. That would be hard. That would be very good for the protocol itself, yeah. And DAO would recognize that. So we see like long-term engagement opportunities.
Great. Thanks so much for answering that. I don't have any other questions for you guys. Michael, I don't know if you want to add anything while we still have some of the DAO here. Or Mark, if you...
Go
ahead, Michael.
Maybe adding to this motivation, most of the protocols work similar, like Gauntlet with Aave and Compound, and Synthetics as well recently joined them. Chaos Labs with Maker and DYDX. They also engage with the projects, and they engage with DAOs and ask them for performance-based payments. So yeah, we simply, if you guys looking for some answers how the business models works for them, I highly encourage you to also take a look on their proposals. For comparison, I think the best is to go to Aave, for example. They're really well written by Gauntlet.
Great. Thank you so much. Mark, do you have anything that you'd like to add before we conclude?
I think it's probably appropriate just to bookend my initial comment, which is that Almanac is here, sort of bearing their throat to the DAO all by themselves, and I just want to stress that point, that this is I think probably the first time that something like this has sort of befallen the Bancor DAO, and it's really interesting, and I'm looking forward to seeing it play out, and how DAO participation in terms of managing an external contract holder is going to operate. But yeah, this is it's an exciting time. I think that that we've got enough expert users who are capable of being critical of whether or not a collaboration of this kind is even something that they want to entertain. And with the simulation that Mike has produced and that is available via the pip installer, kind of gives people the resources required to be able to interrogate what Almanac is doing, right? And so I want to just stress those 2 points, that this is this is something that I consider to be entirely between the DAO and Almanac, and it's a big responsibility. It's a big it's a big change. It's a new precedent, I think, and it's an exciting one, right? Because it's taking massive strides towards that decentralization ideal that I think that we're all striving for. And it's got growing pains and teething problems and everything else, but I do think it's a positive thing just to even be discussing it. Whether or not it comes to fruition is remains to be seen. And I'm going to sort of withhold my opinion, I think, for as long as possible, because I really want to see the DAO discuss this on their own. But yeah, whether or not the proposal is accepted in its current stage, or whether or not it requires massive edits or something before it ends up on Snapshot, and even if it never gets approved, I'm still excited that we've got an opportunity like this one to really see the DAO flex its muscles and make decisions. So yeah, I think it's an exciting step forward.
I'm looking forward to answer all the questions in DAO proposals. Please challenge us, guys, so we can make it better. And yeah, looking forward. Let's take some time with this. This is complex product, so everyone has time to read over it and answer questions. And yeah.
Also wanted to say that if anyone had stage fright, didn't want to get up and speak today, or maybe they haven't had time to really consider their position, I just wanted to say that this is not the last opportunity that you will have to interview Michael in a public forum like this. I think, given the scale of what's being discussed, it would be appropriate to have several more of these calls and in different contexts. I've discussed with Jen and with Michael already that I think that this would be something that would be good for Twitter Spaces, for example, and on the something that can be discussed on the community call and things like that. So if you in the time following the conclusion of this meeting, realize that there are unanswered questions that you have, and that just letting you know that you've got the time to articulate those and bring them to Michael in one of these other discussions publicly. Or you can also write your questions on the proposal itself on Discourse, or both of those things. So yeah, this isn't your last opportunity. Obviously, I said prior comment that I really don't think this is something that should be rushed, and Michael seconded that sentiment. So yeah, this is the first, hopefully, of several discussions. Don't feel like you need to you don't feel like you need to make up your mind immediately. There's time to consider it.
I totally agree.
Awesome. Thank you guys so much for jumping up here with me, Michael and Mark and Glenn and Caesar, you also for joining us up on the stage, and to everybody in the audience for listening in and submitting your questions. And again, please continue the conversation, on the forum. And I look forward to seeing all of those questions and all of the answers into, whatever direction this happens to go in. So thank you, everyone, for joining.
Thank you, guys.
Thank you for hosting us, Jen.
Absolutely. Thank you.
Thank you. Bye-bye.
Bye-bye. Thanks, Michael.